For most of my life, investing felt predictable, almost like following a well-known map. It wasn't easy, but the rules of the game were clear and consistent. Successful investors repeated the same simple principles generation after generation. Diversify your money so that no single mistake could destroy your financial future. Buy great companies that create real value and continue growing over long periods of time. Invest consistently, even when markets are uncertain and headlines create fear. Think long-term, because real wealth compounds slowly over years, not days. For decades, these principles worked remarkably well for millions of investors. But today, something massive is beginning to change the entire economic landscape. That force is artificial intelligence, and its impact may reshape the future of investing. AI is not just another technology trend. It is transforming entire industries simultaneously. In finance, algorithms and machine learning systems now analyze markets faster than humans. In healthcare, AI tools are already helping doctors detect diseases earlier and more accurately. Manufacturing is becoming increasingly automated as intelligent robots improve efficiency. Software development itself is changing as AI begins to assist programmers in writing code. Even education is evolving as intelligent tutoring systems personalize learning for students. One technological wave is spreading across nearly every sector of the global economy. As AI capabilities expand, productivity across industries may increase dramatically. This shift means that traditional investment strategies may need to evolve as well. That realization is exactly why I've started changing the way I invest. Many investors believe that buying an index fund means owning hundreds of companies equally. But when you examine the data more closely, the reality becomes far more concentrated. Today, a surprisingly large portion of major index funds is dominated by just a few companies. Companies like Microsoft have become enormous forces within global financial markets. Apple continues to dominate consumer technology with products used by billions of people. NVIDIA has become a central player in the development of artificial intelligence hardware. Amazon transformed global commerce and continues expanding into new industries. Alphabet remains one of the most powerful technology companies in the world. Meta is investing heavily in both artificial intelligence and the future of digital interaction. What these companies share is an enormous commitment to investing in AI technology. The global technology sector is now engaged in what many call an AI arms race. Companies are investing billions of dollars building massive data centers across the world. Inside those facilities are powerful supercomputers designed specifically for AI workloads. Advanced semiconductor chips are becoming one of the most valuable resources in technology. Meanwhile, machine learning models are improving at a pace few experts predicted. Entire ecosystems of AI tools, services, and platforms are rapidly emerging. Investors expect these companies to generate enormous profits from AI in the future. But whenever expectations grow too quickly, financial markets can become fragile. When investor expectations collide with reality, markets often react dramatically. And history shows that sometimes those reactions lead to major market corrections. Every technological revolution throughout history has created incredible economic opportunities. But alongside opportunity, these revolutions also tend to create speculation and hype. In the 1800s, railroad companies sparked enormous excitement across global markets. In the late 1990s, internet startups captured the imagination of investors worldwide. The dot-com bubble showed how quickly enthusiasm can drive stock prices beyond reality. The housing bubble of the 2000s revealed how dangerous unchecked optimism can become. In each case, the underlying technology or industry was real and transformative. But investor expectations grew far faster than the businesses themselves. Eventually, markets corrected and valuations returned closer to economic reality. Artificial intelligence may follow a similar cycle of innovation and speculation. For more than a decade, the United States has dominated global financial markets. However, economic leadership has always shifted throughout different periods of history. At the beginning of the 20th century, the United Kingdom led global finance. During the 1980s, many believed Japan would become the world's dominant economy. Later, American technology companies once again surged ahead of global competitors. The next major economic leader could emerge from almost anywhere in the world. Europe continues to produce innovative companies in engineering, energy, and technology. Asia remains one of the fastest-growing regions in the global economy. Many emerging markets are expanding faster than traditional developed economies. Global diversification can help investors capture growth wherever it appears. Interestingly, the biggest winners of the AI revolution may not actually build AI models. Instead, they may simply become the most effective users of AI technology. Logistics companies are already using AI to optimize delivery routes and reduce costs. Hospitals and medical researchers are using AI to analyze complex diagnostic data. Factories are becoming smarter as robotics and automation increase productivity. Financial institutions use AI systems to process enormous amounts of market information. Marketing companies now use AI tools to analyze consumer behavior and trends. Across the world, thousands of companies are quietly integrating AI into their operations. This wave of adoption could unlock massive economic opportunities in unexpected industries. Smaller companies may benefit the most from these powerful new technological tools. At the same time, excitement around AI has created an enormous amount of hype. Venture capital investors are pouring billions of dollars into new AI startups. Stock prices of AI-related companies have risen dramatically in recent years. But whenever excitement becomes extreme, investors must remain cautious. Some companies attracting massive investment still generate little or no profit. Others produce only small amounts of revenue despite extremely high valuations. Yet investors sometimes price these companies as if success were already guaranteed. This behavior is often the beginning of speculative market conditions. Speculation can destroy portfolios when expectations suddenly collapse. In the long run, only businesses with real value tend to survive. Technological revolutions do not only create opportunity, they also create instability. Economic power can shift rapidly as new technologies change global competition. Financial markets may become more volatile during periods of major transformation. Because of this uncertainty, some investors choose to hold real physical assets. Gold has served as a store of value for thousands of years of human history. Even today, central banks continue purchasing gold as part of their financial reserves. Unlike paper money, gold cannot be created instantly by printing more currency. That scarcity is one reason it can protect wealth during economic uncertainty. Even a small allocation to hard assets can help balance an investment portfolio. Many investors view gold as a form of long-term financial insurance. Another overlooked strategy is maintaining a healthy reserve of cash. Market crashes often create the best opportunities to buy great assets cheaply. Investors with cash available can act when others are forced to sell. But perhaps the most valuable investment in the AI era is personal skill development. Artificial intelligence will likely transform the global workforce in profound ways. New industries and career opportunities will emerge as technology evolves. Individuals who adapt quickly will have the greatest advantages in the future. Positioning yourself early can create opportunities that others may overlook. The AI revolution may become one of the largest wealth creation events in history. The only real question is whether you will be ready to take advantage of it. Thank you for watching, and see you in the next video.